Hello, this is Ronald with Indicator Vault, and in this video I'm going to go over our Wolfe Wave Dashboard indicator, and just quickly to go over some of the settings. It's very similar to some other dashboard ones we have. You can sort by the symbol, by the age, direction, the pattern, so on and so forth. You can change the colors and font size and such. Breakout line and target line, which are important. I'll get into those in just a second. You change the alerts if you want. I'm just going to keep these settings the default. And if you're not familiar with Wolfe Waves, I'd encourage you to go look them up. They're not grouped into like the harmonic patterns category, but they basically work at like a harmonic pattern. They are very powerful tools to, it's a types of highs and lows that form, and with this indicator it sorts it out for you and will alert you to when they form. And as we can see here at the dashboard, I prefer to sort by age as far as the newest ones, but obviously you can add and take away whatever pairs. You can change these settings if you want to see the breakouts, happen, time frames, the direction. And obviously, this is pretty simple. The wave pattern will be in blue if it's telling you it's bullish, red if it's bearish. But for this one, we've got the GBP, Canadian dollar, hourly chart. So here we've got a, we see this bullish Wolfe Wave pattern form. And so what are some ways we can trade it? Well, one, the indicator itself does give you breakout entries to, potentially take trades on with what candle that it will form. You could take one here with your stop below here, and obviously we can see it does run for about 4-to-1 R&R over 200 pips. But I think we can get much more precise entries with just a couple other, easy confluences. Now, one thing I want to point out, the target line. So part of the Wolfe Wave pattern is as you take this bottom point, the start of the wave, draw the trend line through this the fourth wave of the third, 2, 3, 4, then the fifth wave is supposed to come over to this trend line, which we can see price does, right? So that's what part of this trend line is for, as it starts at the bottom here and then touches the top of the beginning of a third wave, and obviously it draws it out for you. But let's add just a simple RSI indicator just with the standard 14 period, and maybe use that for some confluence. So we can see here we have some divergence from this area to down here. Obviously we can see this is, the Wolfe Wave itself will help, and obviously it will be great, visual to actually eye, divergence from important and significant lows and highs, right? So as we see this intersection here as part of, the Wolfe Wave being mapped out down to here, well, let's see, since we have such a strong impulse down, let's see if there's some divergence, and there is. So we can see matching up with here as their, downtrend. And this by not much, but that does go up. This low is higher than this low. That matches up with this candle. So clear divergence that on the RSI, which is telling us this is a fake out, So sure, we can go into lower time frames here. You can wait for price to maybe, show that strong, rejection away. And then there's, certainly some lower time frame confirmations in here. I'm sure even there's a fib, if you got in at the 70.5 with your stop below this strong low, about 34 pips, it goes, if let's say, using a fib with this target line, we can draw that out to about right there. Look at that intersection of the first standard deviation from our fib range, right? So 180 pips to that for just over a 30 pip stop loss. About a 6-to-1 trade. Plays out very quickly with these strong impulse candles. And so, very simple and easy, extra confluences to use with this pattern. But let's go into another example. So here we are on the GCAD chart again. We're now on the H4, and we've now got a bearish Wolfe Wave pattern showing up. And this one is, in the process of playing out. Obviously, so far it looks good, but I've kept this RSI indicator on. So let's see if we can kind of map out the same, if, there's some divergence showing up again. Obviously, we can see from this candle up to here, it's moving up. From here, to there and here. We can see it's moving down. Yeah, the indicator does go over the trend line here, but we're matching where it meets these candles, the highs and lows. So divergence again happening here, telling us this wick is a fake out. The indicator is staying lower, telling us price wants to go low. So for me personally, if I see a long wick like this, I like to use that as a POI of mine, a point of interest. Specifically, the 50% mark of it, the equilibrium of the wick. Specifically wicks that are at least 60-70% of the entire candle's range. So, you can see I've got this whole purple area as the area marked out. What if we go into some lower time frame? All right, so we've got the divergence here, the long wick, and so price, obviously with the Wolfe Wave showing up, telling us price is wanting to move lower. So, see it breaks, the low that created the high, that created the divergence, has now been broken here. So that is confirming for me that price is wanting to be bearish, right? So we've marked out the equilibrium area of the wick. It also just happens to match up with this gap in between these two wicks. And we can see the great reaction already just to create a new lower low, which it did very quickly, was 100 pips off of a 37 pip stop. You can see there's a bearish 1 hour Wolfe Wave as well. And if we hold to take out the whole Wolfe Wave, 112 pips, and a new lower low, almost 200 pips. Let's go into the 15-minute. And another entry technique you could take, so you have confirmation on the 4 hour and the 1 hour with Wolfe Wave, bearish pattern forming. And you can go into, I would go into at least 2 time frames lower. So for instance, the 1 hour, we had a bearish wolf wave. So go at least to the 15-minute, and even if you felt like it, the 5-minute. And you could just find the most recent low that caused the most recent high, right? So for instance, it would be here, this low, that then formed the high that we are believing is going to be our strong high and not get taken out. You could just put a sell stop below that low with your stop loss above here. Could be an entry technique as well on the lower time frame. Especially since we have other confirmations like the hourly and the 4-hour wolf wave pattern forming, the divergence on the 4-hour. You could just get a quick entry just from a sell stop below the most recent low. And obviously it quickly runs for 96 pips. That's over 3-to-1 off about a 32 pip stop. And so that's just another entry technique you could take, right away. And then, let's say you took partials. Maybe you got stopped out at break even. Here you may moved your stop up some, but after that wick forms, which is this purple zone, we see that that's another entry, waiting for us if price happens to come back up here, which it obviously does, and seems like it's wanting to play out even more. So yeah, this is our Wolfe Wave dashboard. Extremely helpful to spot these patterns with, other simple confluences to take some trades on. So I hope this video helped and was informative. And until next time, best of luck trading.